So what about the markets today? You know, we're coming off that rally we saw on Wall Street. It looks like this U.S. debt overhang pretty much off the shoulders of concerns right now.
It's slightly puzzling to me why the market should be so positive about a debt deal. I understand that maybe there are worries about the levels of debt in the U.S., but we've got unemployment near 9%. You've got monetary policy that is basically ineffective. And the fact that you're cutting government spending doesn't seem to me to be positive for growth in the near term. So
I think in the absence of any really major austerity measures undertaken by Washington, perhaps any little bit is being regarded as being a slight help.
It may be. I'm not sure how much austerity they expected to see, but the problem in the U.S. is not, less austerity, but the fact that what is actually going to boost growth in the economy. So any move towards cutting spending in the short run seems to be contractionary to me, and after all, I think I don't worry too much about overall levels of debt in the U.S. They're much lower than other countries that have been through similar problems.
Well, investors and analysts alike, they say maybe the U.S. is the best out of a bad bunch, considering if you have the comparison with what's happening in Europe right now. So why not put some money into a stock market that's up 10% on the year?
It's the best of a bad bunch, but there are better options perhaps out there in the markets. And certainly we had at the beginning of the year with the Asian markets having run quite strongly. Certainly in the US we did see some of our clients taking money off the table in Asia and putting it in the US. I suspect though that when you stretch your time horizon out a little bit longer, if you're running away from high levels of debt, highly indebted economies, and Asia is still one of the places that you want to be.
Then we go to China, and we'll be looking at China in a bit more detail on the program. But their local debt is a concern. Do you worry about that at all?
I mean, the number one risk, I think, in the Asian region is the Chinese banking system and the local government debt. If you look at it in terms of the overall quantity of debt, even if you add up all the scary numbers that are out there, it's not that much debt, particularly in an economy that in nominal terms is growing in the mid-teens, which is a huge difference from having high levels of debt in an economy that's not growing in nominal terms at all.
Yeah, when you hear figures like, I think the Ministry of Finance there came up with 1.7 trillion US dollars as the debt. I mean, that's quite something, isn't it? But then it's a billion plus people too.
Well, right, and debt as a percentage of GDP really hadn't been growing much until for the 5 years preceding the crisis. Yes, you've had an overhang the last couple of years as you've had another government stimulus program. But the difference between the stimulus program in China and the one in the US is the one in China worked.
Okay.
It was big.
Well, Robert, it was big, wasn't it? So you manage $18.8 billion in assets right now, second best performing China fund in 2010. What do you say to those fund managers that have a very bearish view on China, saying that the property sector is going to collapse and drag down the rest of the economy?
Well, I think my problem with the bearishness on China's property is you only ever hear about the supply story, but nobody talks about the demand side of it. And this is common with all the overinvestment arguments about China. So the number of people going into urban lifestyle in China over the next decade or so is going to be equivalent to the total population of the United States. If you want to build the urban capacity to meet that, you have to take the top 50 cities outside of China and build them twice. And add 2 more New Yorks, 2 more Londons, 2 more Mumbais, and the Chicago thrown in.
And that's just one city, probably, given the size of some of them. I mean,
that's
Shanghai,
before you take into account the fact that the Chinese themselves are saying that they probably have to destroy a large part of the current housing stock because it's of low quality. So maybe up to half the housing stock will disappear as well. So the demand side is huge as well.
Right.
Now, I'm not trying to paint a bull case for Chinese property here, but I'm just saying that let's have both sides of the story.
Okay. Now, we left off talking about China. You made some nice returns in 2010. How did you do that in China? What was the strategy then?
Well, you keep mentioning it's the second best, which means we've got some more work to do. What we've typically done when we've looked at investing in the region is first stretch out your time horizons. Don't try.
How long?
Well, you want to look at companies that are going to survive and grow sustainably for the next 10 years. And there's the key. Too many people are focused on what the growth is quarter to quarter or year to year. You're looking for the companies that can give you reasonable rates of growth over a 10-year period. And if you can do that, then on conventional metrics in the markets, they're probably undervalued. Because people will look at what's the PE for this year's earnings without considering what might the earnings grow to over a longer period of time. And the areas where you tend to find these companies are businesses that are able to build up brand names, franchises, a lot of frequent contact with the consumer, so it tends to be in consumer areas, healthcare, the less cyclical areas.
Really? Yeah, you said that it's mostly about diversification and leveraging on the household spending, potential household spending in China, but you're not advocating getting into these, I guess these, just getting into retail and consumer, not that narrow, but businesses that leverage on usage, household usage.
Exactly. It's not as narrow as consumer retail. Well, think about the services that people are going to consume more of: insurance, wealth management, as you say, the media, the virtual infrastructure that is being built around the internet. All of these things are areas where you can create very solid businesses with a lot of competitive protection.
And also not the big caps, but the mid to small.
Well, again, if you one of the ways when we try to look at a company is we conceive of value in terms of how much would it cost me to buy the business outright. And that gives you a discipline into thinking, well, how big can a business reasonably get? And yes, you tend to find in the mid and small cap area, you're going to find better ideas. Now,
before I let you go, you've been looking at the China market for quite a while now, Robert. What about this, this recent spate of accounting questioning for companies such as Sino-Forest? I'm sure you've read the Muddy Waters reports and Carson Block, et cetera, et cetera. Now the ratings agencies are getting on board, but why did it take to 2011 to call into question of accounting standards and the numbers on the books?
No, accounting standards have always been called into question in China. My first job was as an analyst, and you go up to these companies in China 6 months after the year end.
But why did it have to take an independent person like Carson Block to say, hey, well, you should take a closer look at these figures?
No, what you had is a
books?
series of reverse mergers into the markets in the US. So they didn't have to go through the listing rules. You just buy out an entity that's currently listed. And with the spate of these things that have been happening, there was a new sort of gap that opened up in corporate governance. The truth is, in China, corporate governance has increased in leaps and bounds over the last 15, 20 years. Now, you're never going to be able to avoid everything, but and corporate governance is maybe not at the level in China that it is in the US. But in terms of specific areas of corporate malfeasance, you get them everywhere.
Right, but
the ones
why,
in the US
but
have probably
why
been much
this?
bigger.
I guess this burst. I mean, this. It seems like to be the trend all of a sudden.
It's a lot of them are in companies that didn't have to go through the scrutiny of listing.
Okay.
Now, there are other things you can look for when you're investing in businesses. One of the things we focus on a lot is dividends.
Right.
They tend to be underappreciated in Asia, but if a company's paying you a dividend, then you know they've got the cash somewhere.
Okay.
And there are all these little tools you can use to try and help you.
Robert, just a question. You've been actually in Vietnam before coming to Hong Kong.
Yeah.
So 2 choices as opposed to travelling the entire region.
Right.
Why Vietnam, out of interest?
Well, it's...
Travel plans is the first question, is that right? Okay, go ahead.
Why not?
Why
I mean,
not?
it's an interesting market in terms of its potential. And going there, it reminded me very much of what Guangzhou used to look like maybe 15, 20 years ago. It's demonstrably more wealthy than Guangzhou was then. There are definite problems there, though. And I think the big message that I came out of Vietnam with was that the banking sector is very, very stretched. And the cost of capital is very high. So if you're considering doing anything there, you really have to take that long-term view.
The dong is so weak, though, and inflation running at, 20% or thereabouts. So that's got to be, as we've always talked about. Sorry, John.
Did you go with a view of raising your weighting in one of your funds, and you got a small cap fund, or did you go away with a view that you won't do that?
We have some positions in Vietnam, and we wanted to meet those people and get a check-up. And I think I think we have the best of the bunch out there. I'm not sure that I would have any expectations for near term for that market. Inflation is an issue, wages are an issue, but just getting the capital required, the human capital and the physical capital required to do to put through all of their ambitious plans is going to be an issue for
Why?
the country. I mean, there is a lack of confidence generally in the banking system, I think. It's been leaking deposits, or at least deposits have been growing at 2.5% in an economy that in nominal rates is growing many times faster than that. So I think there's a crisis of confidence in terms of the deposit holders.
You got a PhD in Chinese economic history, just to mention that.
Yeah.
Clearly, the China fund again. I mean, does China really excite you now, or is there concerns that worry you more than ever?
Oh, it still excites me, absolutely. I mean, it's still an economy, we tend to forget about it, but in terms of per capita GDP, it's still well below what the US is at. It's almost a tenth of what the US is at. If you look in terms of installed medical equipment, it's maybe a 30th of where the US is. So there's huge potential. I think what worries me more and more, though, is that in terms of China, where is the next level of productivity coming from? It's been a huge productivity story in China over the last couple of decades, but we're moving into areas where it's more and more going to be about creativity, about new ideas, sharing of ideas. How are they going to build a media industry in China?
They always take the long view. That's one thing that the Chinese are always noted for. And you've done this economic history PhD. Has that always been the case? And, do they look 50 years ahead, whereas other people look maybe 10 years max?
Well, we can talk about my my doctorate if you like. That was about 1925, 1926 strike in Hong Kong and Guangzhou, and that was a time in China's history where they were really looking, day to day. But there's the big difference, isn't it? You've gone from a country that it really was a question of surviving day to day to one where they can make these long-term plans. And we see that on an ongoing basis.
Yep.
Well, I'm not going to test your Mandarin, I promise I wouldn't, right? But what about Yao Ming retiring? Is that a big deal for the country today?
I have absolutely no knowledge or insight about that whatsoever.
I figure I try to test it to the max. We'll go into sports, but he sells a lot of footwear in China. We're talking about consumerism in China as well. But when are they going to stop stocking away all the cash in their mattresses? Because they are a savings economy.
Well, remember, a lot of that savings is in the corporate sector rather than the household sector. If you said, I can link this back into the Chinese property conversation we were having earlier. You think put yourself in the Chinese shoes. You've got three options really for saving. You can go into the equity market, the A-share market, which is very volatile.
You can only go long as well.
You can only go long, and that's a risky proposition. You can put your money in deposits where you're earning negative rates of return.
Right.
Which is the only place, isn't it?
You can own property.
Yeah. So again, you've got challenges because we were talking about this. That the U.S. before pre-Lehman was addressing the demand side, whereas China's actually addressing the supply side here as well, and the demand side. So they're managing both sides of the equation.
Yeah, yes, and if you look at, you're talking about Chinese consumption. The reason why it's stagnated and not grown as much as you would have thought is because so much of that extra purchasing power has gone into buying properties. And I think,
that makes sense.
But when you look forward over the next, decade or so, that purchasing power is going to continue to grow.
And what about the outperformance of property shares? You saw Long 4 up 2.5%, Country Garden up 20% in the past month. What happened to these concerns of overcapacity, implosion? We've been talking about a lot of negative sentiments. Yeah.
It's funny, we're living in a world where people go from one extreme to the next, and it's driven by the fact that you have very low rates of growth in the developed world, and so the politicians and the central bankers are switching from massive stimulus to their worries about the debt, and so there are violent swings in policy, and so I think that's what's been driving the volatility in these stocks too.
Final thought, again, you're based in San Francisco. How much interest have you had in your Chinese funds from the American side? Has it been a dramatic increase?
What I would say is there's a big difference in how the Americans are thinking about their Asian investments. And from being a tactical decision, I'll go in there for 6-12 months and try and make some money, there's more and more people looking and saying, I've had 80-90% of my assets in the US, I need to have a core holding outside of the US. I want to be in the least indebted part of the world, the fastest growing part of the world, and I just want to own the best businesses I can find in that part of the world, and then I'm happy to hold on to it. And I suspect that's been the big change in the client base in the US.
They'll come to you then.
Now he's the second best performer, right? Okay. Right.
Who is the best?
I'm anxious to find out.
Robert, thanks very much for that. Robert Horrocks from Matthews International Capital Management.